FOMC live stream starts now. In the next 2 minutes, the Federal Reserve is going to be announcing the next interest rate hike, and I hope that you guys are all ready. There it goes. We got our backlight ready. We got NASDAQ beginning to show signs of a support. What's up? What's up? Good afternoon. How are you guys all doing today? I want to blame Raising Cane's for making me a little bit late. I was supposed to go live 5 to 10 minutes before market or before the FOMC meeting. I've never had them take this long. I do apologize, but guess what? We still got them tendies. 1 second. Alrighty. And in the next 47 seconds, the Federal Reserve will be announcing the interest rate hike. There is a 95% probability, what was it, 94.6 probability that the Federal Reserve is going to raise interest rates by 0.25% and a 5.4% probability that the Federal Reserve is going to raise interest rates by half a basis point. So we shall see which way the market ends up actually trading. Hope that you guys are ready. Again, please make sure that you guys drop a thumbs up if you guys haven't done so already. Alrighty. Here we go. We got 9 seconds left. Do something now about your position or forever hold your peace if you do not want to experience how the market reacts to this FOMC rate hike. There it goes. Let's see. Here it goes. Dropping. Looks like, wait. Are we going to pick up? Am I going to want to add to SQQQ? Wait, direction's beginning to change. Look at that. Market is picking up. NASDAQ showing signs of an uptrend. Wait, it's still trying to decide. Let's see which way we go. All righty. Here it goes. And the decision should be in. There it goes. NASDAQ indicating signs of an uptrend. Looks like SQQQ is picking up. All right. Nope, still looking like it's still trying to decide. What do you guys think? SQQQ pulling back a little bit. NASDAQ trying to indicate signs of an uptrend. Looks like we're testing this slight little resistance. Let's see if the bulls come to flush out the bears. Anyone playing Meta earnings? We will be live streaming Meta earnings later today. So again, just another reason to subscribe to the channel. And Jerome Powell speaks in 29 minutes. And again, it's normally, this is just from my experience and it's just my opinion. But one of the things that I want to remind you is that this is the report and then Jerome Powell speaks 30 minutes after. So at 2:30 p.m. Eastern time, Jerome Powell is going to be speaking and answering questions. He has a little script that he reads off of for the first 2 to 3 minutes. And then after that, for about 30 to 45 minutes, he begins to answer questions from different news outlets, right? And during those questions, depending on how he answers, he's very clever, right? So he normally does not say things that completely skew the market, but who knows, right? Something that he says, just like during earnings report and earnings calls, something that he says can completely shift the market. Normally, what I tend to see is the market reacts one way when the report comes out, and then it reacts another way once the actual, live stream happens when he begins to answer questions. Alrighty. Here it goes. Looks like we're still testing. I kind of like this setup. Please do not copy. Just because I choose to take a trade does not mean that you need to. I'm going to stay pretty light right now. I'm going to go in with 1,000 shares. We're not seeing much progress right now on the NASDAQ market. And if we're lacking progress, it's probably for a specific reason. Come on, buddy. Update, homeboy. Oh my goodness. Okay. Yeah, it's 25 basis points. I could see that in the chat, but it just pisses me off. Can you guys see that? I took a little bit too much pre-workout when I went to the gym, as you guys could tell. I'm running on a few hours of sleep. I had my flight training this morning, so I'm on edge, right? I was very calm this morning, but I feel like I was like coming off of the high of, flying, and pun intended, right? I guess. All right, NASDAQ beginning to retrace. I'm liking this, right? I'm just going to be careful here, be cautious. There's no reason that I need to be super, super aggressive with my position or my trade. It's one thing that I want to remind myself. Okay. How are you guys feeling? You guys feeling good? So my profits today was what? I can't see it because it's 37K and I'm at, wow. Jesus, leave some money for the rest of us. All right, I'm going to do 1K here, just adding to it. We're testing EMA. It could easily get rejected here, so just a quick little heads up. A lot of consolidation. Majority of the resistance that we've seen during normal market hours has been $17.98, although $18 is the glorified dollar value. I mean, what I like to focus on is what price point does it touch the most? And in my opinion, it's been around $17.96 or $17.97. You guys let me know what you think. But that's been the more common resistance range. And there it goes, NASDAQ beginning to pick back up, bouncing off of that EMA, which is in favor of the bulls, not in favor of the bears. Please tell me any of the best shares for the next 6 months. It sounds like you want people to tell you where it is that you should put your money. And let me just make it easy for you. You should just not trade or invest in the stock market. Just save yourself time. Just don't even trade. If you're not even going to be able to work for it, then that is a huge red flag, right? When I see comments like that, it reminds me how lazy people are. And if that offends you, then I really hope it does. So it puts you in your place. It's really unfortunate that you think that you can just come on here. And again, this is the big mistake, is why does anything with a very low barrier of entry have such a high failure rate? And it's because people like that, because people are so unwilling to work towards it. They want everything. I get messages all the time, Ricky, I want to be a millionaire. Ricky, I want to be able to live off of trading. Ricky, I want to make 5-10K a month off of trading. Ricky, I want a supercar too. I have huge aspirations. You think that's special? You think it's special to want to be rich? You think it's special to want to do well for your family? No, that's basic. Everyone wants to do well, right? So again, it comes down to how bad you want it. If you really want it, then again, you can talk all you want. Talking means nothing, right? Put in the work. Understand if you cannot decide yourself what makes a good investment, what makes a good stock to trade based off of your criteria. If you cannot form that opinion yourself, then you are not ready, right? It's kind of like myself. I'm learning how to fly. I've never landed a plane yet. My skill level is not there. My experience level is not there. I'm not going to just take the risk and just wing it and try to land a plane, right? It comes in stages. I need to understand this, right? I'm learning how to do something. You're learning how to do something. Everything comes with time. It comes down to how bad you want it. Consistency over a long period of time and overcoming challenges. That is the way to do anything in life. Not being lazy and asking, what should I do? I don't know if copying got you very far in school, but it's not going to get you very far in life, and we all know that. All right, here it goes. Still testing support here. Gonna have to be cautious. We're testing that same resistance range on QQQ. You see that? I have 23 minutes before our savior JP. My goodness, JP. I'm just kidding. Some people get. Hello? Hello? Beautiful. We love telemarketers, right? Literally everything priced in already. It looks like it, right? It looks like everything is priced in. It looks like NASDAQ already was pricing in that Fed quarter of a basis point interest rate hike. But again, when Jerome Powell speaks, this isn't even like anything crazy, right? We've seen it many times when an interest rate hike is announced, but it was more when we were questioning what was going to happen. Do you guys remember that? When we were like, is it going to be 1/4 of a basis point? Is it going to be 1/2 a basis point? Is it going to be 3/4 of a basis point, right? Now it's kind of like, we kind of know what the Federal Reserve is going to do because we have that kind of track record. So I feel like the influence that it has when it announces that report is less of a surprise. But when he speaks and how he answers questions are super, super important. So I'm going to be very careful here. Again, my job is not to be perfect. My job is not to want to avoid risk. It's just to manage it, right? If we make new lows here, I'm just going to keep it simple and close it. It's that simple, right? There's a break-if pattern. Why overcomplicate it? There's no reason to be super emotional, super irrational. Keep it simple, and when in doubt, cash out. Am I whispering? Some people were saying that I was being too loud, so that's why I'm, I guess, watching my tone. Alrighty, testing support, testing for a potential breakout here on QQQ. Watch out, this is in favor of the bulls. I'm telling you this as someone that is a bear right now, right? There's no reason for me to oversell something even to myself when obviously, direction is very clear instead of overcomplicating it. But again, it's just holding myself accountable and managing and mitigating this risk. Here it goes, testing 1785. Watch for the break below, watch for the break below. I'm going to get my order ready. Order is ready, and we're going to sell. Let me see that 1784. 1784, 1785. Let's see it, let's see it. Bada bing, bada boom. Are we going to, come on. There it goes, 1782, 1783, yep. It's going to be a bounce. Giving it some cushion. 1780. Here, let me do this. I'm going to do 3,000 shares. I'm going to put a stop. Just at 79. Keep it nice and pretty, right? Right below that support. Common support range. You guys see this? Common support. We went back to retest. Common support. Patterns tend to repeat themselves. They don't always have to. We're testing oversold levels right now. Let's go ahead and double check. QQQ looking good. Am I sounding like an auctioneer? Yeah, I guess I was, right? Because I was. There it goes. Testing previous lows. Let's see if we hit it yet. Nope. 1779. There it goes. Watch for the break above. We had an amazing trade this morning, and we're going to top it off with a stop loss, right? It's the beautiful, there it goes, stop loss triggered on SQQQ. My job is not to be perfect. I saw potential there. Obviously, didn't go according to plan. So I manage and mitigate my risk, right? Rare Woody L. I love that. What's your name? Let's see if I remember it. Alex Yin. I'm going to remember you. Buddy. I'm going to remember you. Now to the tendies. Honestly, I'm starving. I haven't had anything to eat today. My little skinny ass needs to eat something, so... Actually, I did have food at McDonald's. I totally forgot about that. I had a really early morning, so... Oh. What's going on, Carlos? What's up, my guy? How you doing? Again, testing overbought level right now. RSI, MACD, everything's overbought, but again, indicators are to be used as a reference, never as a sole reason to take a trade. Therefore, yes, it is overbought, but it's still incredibly bullish, meaning that it doesn't matter how overbought this RSI tells me it is or how overbought this MACD tells me it is. It can still continue to form higher highs and higher lows. That is what I'm looking for, lack of progress. We talk about this all the time within our LPP live sessions. Are we lacking progress? Are we showing signs of a resistance? Right now, no sign of a resistance. It's continuously forming higher highs and higher lows, and that's why I manage my risk, because progress is being made against me. And when that's the case, my job is to accept when direction is not in my favor instead of trying to fight it. I was fighting it, what was it, yesterday, right? I didn't fight it this morning, right? On this trade that I took, the original trade, it looks like we're going back down to previous support levels. I didn't fight it during that trade, but as of right now, looks like direction is against me right now. So therefore, right, when in doubt, pull out, cashed out. Yes, I took a little bit of a loss on that trade, but guess what? It's 11:14. We still got an hour and 45 minutes left. It's about 16 minutes after. In 16 minutes, Jerome Powell's going to be speaking. That, to me, is more important. My trading doesn't have to be perfect. I know I'm still in the green based off of the ridiculous and amazing trade I took this morning. I built myself a nice little cushion, and I'm just waiting for the next setup that meets my criteria, right? There's no reason to overcomplicate it or to get super emotional, like, holy crap, man, I took a bad trade. It's like, dude, I'm human, right? We're all human. You're going to make bad mistakes. I'm going to make bad mistakes. Accept it. Manage them. Our job is not to avoid risk. Our job is to manage it. Remember that. That's in all areas of life, relationships, business, trading, whatever the case might be. Your job is not to avoid it. Your job is to manage it. How much exposure you leave yourself or you open yourself to. Look at that freaking beautiful setup. Bada bing, bada boom. Let's see. Can we break above 1788? What effect does this have on gold? Look at it. Look at gold and look at NASDAQ. Look at the correlation, right? You should be able to do a split screen. If you have Webull, you can do a grid and have two different screens. Therefore, you should be able to see them side by side. Look at gold on the day chart. Look at NASDAQ on the day chart. Try to find the correlation. That's what I do, right? See if you find a correlation. On green days, what does gold do? On red days, what does gold do? Is there an exact correlation, or is it only during sometimes? If Federal Reserve comes in higher than expected, what does gold do? If Jerome Powell says something negative and market reacts a specific way, what does gold do, right? It's all about learning how to do this on your own as well, right? Man, these price moves are crazy. It's not too crazy. I know you've been here before, Umesh, right? We've seen some, let's be honest, like we've seen some pretty crazy FOMC meetings, right? Like some wild ones, like 7% days for TQs or for SQs, right? Like what was it? Like a 17% day. I think it was for TQs or something like that. Yeah. So this is pretty common. I think this is why I'm a little bit more conditioned, is because we've taken beatings from NASDAQ markets so many times before that when little things like this happen, right? We go from highs of 18 to lows of 1780. It's like, dude, I can tolerate that. I've been beat up harder, the good old days. Yeah, that's why, it's all about conditioning, what you condition yourself to. That's why we say on our green days, we prepare for our red days, and on our red days, we prepare for our green days. You can take it as a slap across the face or as a lesson learned. I guess I am kind of whispering, right? I do apologize. I really don't mean to be like whispering in your ear or whatever the case might be. Is it too loud? Is the audio too loud? How am I doing, live chat? Am I doing okay? 13 minutes left. Yep, 13 minutes left until Jerome Powell, Big JP, begins to speak. Let's see if he begins to wear his roly-poly. He's going to wear his Submariner, right, Justin? That's what he wears, Submariner. Fine here. Audio's good. Rookie ASMR. Lucky you. Appreciate that, Dino. Black sub, baby. Alrighty. Do you guys mind if I eat some chicken tendies? We're just waiting for Jerome Powell to speak, right? It shouldn't be too crazy. One thing that I do want to remind you is while we wait, remember, now is the time to prepare. So if the market begins to show signs of lack of progress, if maybe you feel uncomfortable with a trade that you're in, if you're too heavy right now or too light right now, whatever the case might be, remember, you prepare in advance. So if you think that the market's going to aggressively push up or aggressively sell off, or you're just wanting to stay cash to prepare, create your game plan now. Not, oh shoot, market's going against me. What should I do? No, now. Okay, if market sells off on me, where am I going to manage risk? If market goes with me, where am I going to average up or lock in profits? The time is now. So use this downtime to your advantage. It's the people that don't prepare that end up getting surprised, right? The only people that freak out when the market pulls on back are only those that don't prepare. I'm sorry for all these riddles and all of these analogies, but I need it to make sense. I need it to stick with you. I do want to remind you again, these live sessions, a handful of you guys messaged me via Discord or via Instagram. If you didn't see today's live session, it was LPP team, let me know in the live chat. Was today's live session not literally like one of the most ideal reversal setups, right? I personally love trading reversals. I don't know if you do. I don't know if you struggle, but it pulled on back, consolidated at the moving average, 3 stages of a reversal. We waited for confirmation, averaged up into it, and then locked in profits at previous highs of $18, just like previous resistance levels. If you look at the 5-minute, you can see that previous highs have been 18. So surprise, surprise, we locked in profits. I didn't sell at the highest price point. I didn't buy at the lowest price point. It was just a decent setup. And this was all caught live. So if you want to see today's live session, shoot me a direct message. I don't know why so many of you guys overcomplicate it. You're like, I don't know if, just shoot me a direct message. It's the first or third link in the description down below, depending if you want to message me via Discord or via Instagram. If you message me via Discord, I should be responding to all of your messages, and that is the first link in the description down below. But again, I do trade live with one team and one team only. It is my Learn Plan Profit group, and it's the second link in the description down below. So if you did get to see what the LPP gets to experience every single day when I trade, again, I'd love to have you as a part of the team. We're running our biggest sale right now. It's $175 off. And if you have any questions before signing up, shoot me a direct message. But if you're ready right now, second link in the description down below. It's $175 off. And again, like I said, one-time payment, lifetime access. It doesn't get much more simple than that, right? Alrighty, yeah, I'm gonna eat those tendies. Let me see. Okay. Did you guys see that AMC sold off today? While I have you guys here for a good laugh, AMC, for those that said, oh no, AMC's, I know it's none of you guys, right? But AMC pulling on back from highs of $8.76. I don't like picking on people. The only people that I like picking on is the bag holders that continue to hold the bag on AMC, right? It's so funny. But I know I need to stop making those videos, but I just have too much fun. They hate it when I shorted AMC. I don't like shorting it either. Only when I make money, I'm just joking. Oh, man. That's petty. Ricky, come out to Oregon. I will buy you Taco Bell. All right. I'll spend whatever it costs to fly out there just so I can get some Taco Bell. Yeah, we do not want that. I'll put the microphone a little bit further back. I wish I had some no copyright music I can play for all of you guys. But again, as of right now, I'm waiting for the reversal to form on SQQQ, and we have 8 minutes left until Jerome Powell begins to speak. So again, if it's not too much to ask, make sure you drop a thumbs up, make sure that you're subscribed to the channel, and we're going to wait 8 minutes and watch how the market reacts when Jerome Powell begins to speak. Jerome Powell is the head of the Federal Reserve, who is again in charge of monetary policy for those that are unaware. If this is the first time that you've ever watched Jerome Powell speak or an FOMC meeting, first off, I'm so happy that you're here, that you chose me to watch out of all people, as you have many different options out there. And I really hope that I can answer any questions you might have either during this live or shoot me a direct message. Like I said, everything's linked down below. Can you see my raising tint? Yes. Here it goes. Let's go. This music better not be copyrighted. Watch me get copyrighted because of this freaking Federal Reserve music. No way, right? We have about 3,000 of you guys here, and we only have 400 likes. We are going to be live streaming the Meta earnings, which is after market hours. If it's not too much to ask, if you guys can please get this video to over 1,000 likes, we'd greatly appreciate it. And of course, make sure that you subscribe to the channel and turn on your post notifications. If not, YouTube literally was not going to notify you when I go live. So just a heads up on that. There we go. NASDAQ dropping. You see that back there? NASDAQ dropping, SQQQ. Same resistance range, just a heads up. We have 5 minutes left until Jerome Powell speaks. Look at this. Testing moving average. When in doubt, cash out, baby. Oh boy. Beautiful sell-off. Oh my goodness. Oh my goodness. I'm making too much money. It's not fair. There it goes. Sold at $17.99. There it goes, nice little bounce. This is why, again, testing previous resistance range, right? If you're part of LPP, you know exactly what we're talking about. We talked about at $18 a share. That's been a common resistance range for the past week for SQQQ. SQQQ, let me be very frank. Trust me, I want the market to pull on back. I hope it does. But guess what? My hopes, my desires mean absolutely nothing to the stock market, right? So I need to respect it. And guess what? NASDAQ market has been more bullish than it has been bearish. Therefore, I need to respect that. So SQQQ is a bear ETF. So anytime that it's testing a resistance, I would say that I have less ground to stand on as a bear than I do than a bull. Make sense? It's like understanding when you can be aggressive and kind of like, no, like market direction is in my favor versus, hey, you know, I should probably respect the market. Maybe it's not the worst idea to lock in profits right now. Do you get what I mean? I see you as a sandals guy. I never wear sandals. You'll never catch me wearing sandals. Literally, even at the beach, I'll walk barefoot before I wear sandals. All right. We still got the sell signal here on QQQ, but again, that indicators mean absolutely nothing when fundamentals come into place, right? Jerome Powell can say something that was not factored in, completely shift the market. It doesn't matter what your indicator said. Oh, we're above EMA, we're above moving average. Understand that indicators can only take you so far, right? And then you have to respect overall what's being announced. And sometimes, obviously, if it's news, something that, you know, like when Russia attacked Ukraine, not something that at least I would have been aware of, right? Or prepared for. It's just news that catches us by surprise. This is why risk management is so important. Powell's speech will shift the market. It often does. Again, another reason on why I'm choosing to reduce my position size. But again, just because I'm choosing to do so doesn't mean that you need to. You need to respect yourself and your intentions and your risk tolerance, and I'm respecting mine. Here goes. It sounds like Jerome Powell, Big JP. Let me see that Submariner. All right, guys. I hope that you guys enjoy this little live stream. Again, Jerome Powell's going to be speaking. If this is your first time, if you have any questions, either save it after he speaks or send me a direct message via Instagram or via Discord. Oh, let's get a round of applause. This is his script.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate 1/4 percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates.
Wow.
And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective.
Watch for the bounce off of the moving average.
The committee raised the target range for the federal funds rate by 1/4 percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting, based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, here we go.
Mr. Chairman, thank you. You have, I think, a couple times in your opening remarks, talked about this language.
Testing same
the extent
resistance.
of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same questions. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remains strong while cooling a bit, and the June CPI report actually came in a bit better than expectations for a change.
That's
And
good.
the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation. We'll be asking ourselves, does this
NASDAQ taking
whole
off.
collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates.
Wow.
So that's how we're thinking about the next meeting, and how we're thinking about
Super
meetings
bullish.
going forward potentially. But we're now mainly thinking about the next meeting. I will also say, since we're talking about
Is this
it,
an overreaction?
between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise
Wow.
things again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
Quick change of
If I could
direction.
just
Once
briefly follow
again,
up on something you said there.
look at that.
You said the data in the intermediate period, it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that
Whoa.
and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but
New
it's just
highs.
one reading, as everybody knows.
Look at that,
and,
going
we've
break
seen-
even on the
we've
day.
seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina. Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing, but performing well this summer, is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Yeah, so I would say it this way. The overall resilience of the economy, the fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy, overall, that's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
I love that Barbie question, though. That's pretty funny.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating, JOLTS looking good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
So if you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations. And as a result, we went ahead and took another step. And that's a labor market that continues to be strong, but gradually slowing. I mentioned.
This is a huge push. Just a reminder for those that had the intention to lock in profits. Just another reminder to stick to your plan wherever that might be. Again, NASDAQ looking incredibly bullish, but again, very overbought. No breakout pattern yet, but just your reminder.
Nick Timmeros of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data.
Beautiful
I think,
push.
with a particular
Congratulations,
focus
Bulls.
on making progress.
That was a tough one.
If I could follow up, last month you said there were benefits to moderating the
2.62%.
because it would give you more information to make decisions. Would another
Testing
CPI
support.
report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data. And that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
What Jerome Powell said is, stop asking me the same question. My answer stays the same, buddy.
Chris Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now, after trailing them for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you were really, sorry, what your question was?
Well, I mean, you've talked for many press conferences now.
MACD, our
the
side,
harm
everything
created
looks
by
good.
inflation, how hard it is.
Lack
for
of
people. So how
progress.
much of that are we still seeing with inflation now down at 3?
So
Watch
I guess
out
I
for
would put it
previous
this way.
support, new resistance.
I'd say it this way. It's really a question of how do you balance the 2 risks, the risk of doing too much or doing too little. And, I would say that
Testing support.
we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because
Let's
that's
break
what
that
we think
support,
that's
Bulls.
is signaling
Let's
where
break that
headline's gonna go
support.
in the future.
Watch
And
for the break,
core
watch for the
inflation's still
break.
pretty elevated.
It's like the rubber band effect, right?
Come down now,
You
but
pull
it's
it
still
back, you
quite
stretch it
elevated.
back, the
And
quicker
so
it
we think
falls.
we need
Let's
to
see.
stay on task, and we think
Or are
we're
the
gonna need
Bulls
to
that
hold-
strong?
Certainly hold policy at restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here.
Testing support
and
on
we hope that that's as
this
little
would
as
be in
possible.
the sending
We have to be
support
honest
if
that
it bounces.
that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside.
Beautiful.
So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where
old
it creates
resistance,
more
new
inflation?
support? Watch
People talk
out.
about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see
very critical range right now here for NASDAQ market. The reason why is it pulled back enough already that NASDAQ can find a support here. I'm saying this for all of the bulls. If you're being all of the bears. If you're being very aggressive, you're not doing anything about your position size, be very, very careful at this specific zone. At least that's what I'm choosing to do. Just my 2 cents. I just don't want you to put yourself in a position that is too risky. So just a heads up on that.
restrictive enough for long enough to have its full desired effects. So we intend, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that collectively, if that's our view, then we will do more.
I don't know how many times he has to answer the same question.
Thank you. Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in
Colby
explaining the
Smith in the
rationale for
house.
holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions.
Watch for the
reversal.
reversal.
So that's what we did. And so I think it's possible, I mentioned before, it's possible that
Bouncing,
we would move it
bouncing,
consecutively.
check
We're not
it.
taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that. And I think it'll sort itself out.
Thanks. Howard Schneider with Reuters. Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say, it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty.
NASDAQ market is holding right now, so we're testing our resistance right around 378.50 for QQQ. Just a little heads up for both the bulls and the bears.
Tools to do that, no one should doubt that. I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream estimate of near-term inflation expectations, you get a real federal funds rate that is well above most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restricted until we think it's not appropriate to do so. So that's how I think about it. I mean, if
NASDAQ picking up.
I would say we've come a long way. We are resolutely committed to returning inflation to our 2% goal over time. Inflation has proved stronger than we and other forecasters have expected. And at some point that may change. We have to be ready to follow the data. And given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending
lower
data
highs on NASDAQ.
The growth rates edging down towards and heading below zero, which is usually a recession indicator.
So I guess the SLOOS will come out early next week, and I would just say it's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source, but I think what matters is the overall picture is of tight and tightening lending conditions, and that's what this SLOOS will say.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah. So, interesting question. So, let me start by saying that the inflation surge that we saw in the pandemic resulted from a collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive monetary policy, which would help return the balance between supply and demand by restraining demand. And we think that's broadly what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the effects from the war in Ukraine. And that's a good thing, and the public experiences that, as I mentioned earlier. For core inflation, I'd say there has been a role for both factors, both that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the beginning of the reversal of spending back into services and away from goods.
JP talking about reversals?
So take autos as an example. The combination of an increase in sales and inventories, while vehicle inflation has decelerated, points to a substantial role for supply. But there's also a role for demand as, you know, the rate loans and things like that are more expensive. So they're both working there. Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market. You know, I would say monetary policy is working about as we expect, and we think it'll play an important role going forward, in particular in non-housing services, where really we think that's where the labor market will come in.
Just a heads up, in 2 minutes, power hour begins, which means it's the last hour of market open. Just a little heads up on that. And then Meta reports earnings, which again, I will be live right when the market closes.
Those two sources that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector.
Edward.
Thank you, Chair Powell. First, let me compliment your tie, the choice of tie. So thanks for taking our question. So the Beige Book, it said, input cost pressures remain elevated for services firms, but ease notably for manufacturing sector. Is that an indication that there's a wage inflation pressure? And how do you target the pressure on the wage inflation without pushing the economy into recession?
I think as it relates to goods, it's really an indication that supply chains and shortages are easing. And so what was the first part of it?
So wage inflation, like how do you target wage inflation without pushing an economy into a recession?
I don't think we're targeting wage inflation. I think what we're looking for is a broad cooling in labor market conditions, and that's what we're seeing. So wages have actually been gradually moving down. They're still at levels that would be consistent over a long period of time with 2% inflation. Nonetheless, we're making progress there. And by so many indicators, labor market demand is cooling. You can look at surveys by workers and businesses who see that. You can look at the quits rate normalizing. You can look at job openings coming down. You can look at just job creation in the
look at that.
Establishment survey has, it's still at a high level, but it was really an extraordinarily high level for most of the last 2 years. So you see cooling, particularly in private sector in the last in the last report. So I think we see that, and it's happening at a gradual pace. So that's actually not a bad thing in a sense, because if what we see is a labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired, many people going back to work, getting wages, spending money, and that's really what's driving the economy. But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still, we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike, and the common thing is they come out with agreements like big pay increases, like UPS, and we have the auto workers coming up. Are you concerned then about a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations, not our job, not our role. We monitor these things and we'll keep an eye on them, but really that's something that's handled at that level.
All right, power hour is here.
Hi, Victoria Guido with Politico. I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates, or is the speed at which inflation is falling also important?
I think you'd take both into account. I think you'd take everything into account when you start cutting rates. It would depend on the whole. On a wide range of things, and when people are writing down rate cuts next year, it just is a sense that inflation is coming down, and we're comfortable that it's coming down, and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates.
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. it would be, many people wrote down rate cuts for next year. I think the median was several for next year, and that's just going to be a judgment that we have to make then, a full year from now. And
He said he doesn't believe any rate cuts this year.
Inflation is in fact coming down to our 2%
Wow.
goal.
That's the first time I've heard of that.
A good part of Wall Street has become more confident that the Fed is going to be able to engineer a soft landing, and they've reduced their forecast for recession. And I'm wondering if the staff has changed its view on the likelihood of recession being likely, and if you personally have changed your view in terms of becoming more confident that you can achieve a soft landing.
So
Forrest Gump?
it has been my view consistently that we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances, many past instances of tightening that look like ours. That's been my view. That's still my view, and I think that's sort of consistent with what I see today. So, but it's a long way from assured, and we have a lot left to go to see that happen. So the staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession. I just want to note that that our staff produces its own forecast, which is independent of the forecast that we as FOMC participants produce. Having an independent staff forecast as well as the individual participant forecast is really a strength
Bouncing
of our
off of
process. There's just a lot of, I think, constructive diversity of opinion that helps us make, informs our deliberations, helps us make, I hope, better decisions.
And is the reason for optimism that inflation has come down and you still have a strong labor market? I mean, does that add to the optimism?
I wouldn't use the term optimism about this yet. I would say though that there's a pathway, and yes, that's a good way to think about it. We've seen so far the beginnings of disinflation without any real costs in the labor market, and that's a really good thing. I would just also say the historical record suggests that there's very likely to be some softening in labor market conditions. And consistent with having a soft landing, you would have some softening in labor market conditions, and that's still likely as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment. We've seen softening through
Watch for the break.
Job openings coming down.
Watch for the break or watch for the bounce.
All the way back
critical,
to more normal levels.
critical range.
The quits rate, so people are not quitting as much. We've seen participation, people coming in, and so labor supply has improved, which has lowered the temperature in the labor market, which was quite overheated, going back a year or so. So we're seeing that kind of cooling, and that's very healthy, and we hope it continues.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it.
Go.
In effect, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year.
Look at that, all in 1 minute.
The federal funds rate is at a restricted level now. So if we see
testing moving
coming
average
down credibly, sustainably, we don't need to be at a restrictive level anymore.
Oh
we can move back to a neutral level.
That feels good.
And then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure.
Be cautious. Strong resistance there.
And it's hard to make I'm not going to try to make a numerical assessment of when and where that would be, but that's the way I would think about it, is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until, all the way back to 2 until 2025 or so. So,
what do you guys think that we're at for the day? Let me know in the live chat. Oh, just broke above.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. It's been over 4 months since a handful of regional banks, including Silicon Valley Bank, failed. When you look at credit conditions now, given Bank of California's acquisition of PacWest, does this acquisition suggest the full impact has not been felt? Or are you comfortable saying that we've seen most of the ripple effects that may have occurred at this point? And how does this
overreaction? We caught it.
So I don't want to comment on any particular merger proposal, but I will say things have settled down for sure out there. Deposit flows have stabilized, capital and liquidity remain strong. Aggregate bank lending was stable quarter over quarter and is up significantly year over year. Banking sector profits generally are coming in strong this quarter, and overall the banking system remains strong and resilient. Of course, we're still watching the situation carefully and monitoring conditions in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that were more affected by the turmoil in March.
Confirmation, directions favorable. Now we're reaching overbought levels based off of previous highs.
Very large economy of ours. From them,
I'm choosing to average out at these overbought levels. You do not have to. You're an adult. You can do whatever it is that your goal is. My price target, my take profit was around that $18 resistance, just like I announced to our LPP team. That was the resistance that I was aiming for on my original trade. That is the resistance that I'm aiming for on this trade. I left myself with 1,000 shares on the open. I saw some of you guys guessing around 11 to 12K. There it goes, $11,852 on the day, leaving myself with a total of, when it comes down to open shares, 1,001 shares are left in the open. Some money, but nothing crazy. Again, I should probably just sell the 1,000 anyways. We're at that overbought level, so I'm going to sell the last 1,000. I'm going to leave my one lucky share. It's just the thing that I like to mess around with. There it goes. $11,872.81. Just so you can see, I have no open position. Oh, what the? Oh, I traded it this morning. I was like, what the heck? I forgot that I traded it this morning. I shared it with the LPP team, but again, just my one lucky share, and that is all. Just so you can see my overall positions. I have my Apple position, obviously, but then I have TQs. Closed it out, left myself with that one lucky share, and SQQQ, we got 50 minutes left until until Meta reports earnings. Today is a beautiful day. I mean, to say the least, right? Super, super grateful. We caught this trade. This was one of my big trades. If you're part of LPP, you caught my original trade during today's live. I think that one was much more ideal. This one was, we just trade FOMC quite often. We've seen it time and time again. Remember, it reacts one way, then it reacts another, and then Jerome Powell speaks, and then it reacts another way. Days like this are not designed for beginners. A lot of people I see are asking, hey Ricky, should I jump into TQs now because now SQQ is overbought? I know that I'm always just one bad trade away from having a red trade, right? And because of that, I'm really working on trying to be selective because I know how bad overtrading can be. Not because of other people telling me, but because I've experienced it myself. So I'm choosing to hold myself accountable to be a little bit more aware of that. A big part of my focus today was just position size and making sure that if I did take a position, I didn't overexert myself or bite more than I can chew. And I often see that to be a big mistake for people. I feel like I played that very, very well today. And today is definitely one of my better days. I'm not going to sugarcoat it. This is not an average day for me. The past 4 days have been absolutely incredible. If you've been following my journey, I'm just so grateful that I'm able to do this in front of you guys. It's not just showing you a screenshot, but it's showing you, you guys saw when I originally cut losses, right? Or on one trade, it went south, went back into it, added more to it, all that good stuff. And you see it when it goes according to plan. You see my good trades, you see my bad trades, and I think that's what it's all about. I mean, LPP has seen more bad trades than any of you guys, right, as they get to watch me trade live every day. But that's what I hope, is that a beginner can watch me on my good days and on my bad days and learn from my experience so it doesn't have to cost them. That's one thing that I want to remind you, is that when you are learning how to trade, this isn't school, right? When you're learning how to do something, when it comes down to the stock market, and if you're trading with real money, it costs you money. It costs you real money when you take losses. This is why I always try to encourage people of one of two things: paper trade, which is simulation trading. I have a video on that. Or trade with as little as possible to take it seriously, right? Focus on what's important, and that's learning how to do something. If you can't explain to me why you are buying, why you are selling, your trade plan, the why behind it, then in my opinion, you're not ready to take the trade, right? This market's very risky. There's no reason to sugarcoat it, but with great opportunity comes great responsibility. And I really, really hope and wish nothing but the best for you. I hope that my day and my trade today can motivate you to see what's possible. Obviously, you can see the dollar amount that I trade with all the shares that I sold. So please do not compare your profits to mine, just like I wouldn't compare my profits to someone trading with millions of dollars. It's just there's levels to this, right? I'm working towards getting to where they're at. You're working towards beginning to learn and scale your account. But understand one thing: we all have our own paths, right? So this is why it's so important to learn at your own pace. Some people grasp this much quicker than others. You're not here to impress anyone, right? You're here to focus on yourself. I want you to be so selfish that all you focus on is whatever will benefit your future self. That should really be your main focus. Not for you today, but for you in the future, right? What habits can you implement that are healthy that will benefit your future self? I think that's a great way to look at it. That's very forward thinking. So if you have any questions, I really hope that you enjoyed this little session. I will be live streaming the meta earnings in about 45 minutes. I'm going to take a quick little break and then I will be live once again. So I hope that it earned your thumbs up in this video. I hope that you guys can consider subscribing. And I do want to remind you, I do trade live with one team and one team only. It's my LPP team. They get to watch me trade live every single day. It's a one-time payment, lifetime access. And yes, we're running our biggest sale, and that is $175 off. It's not going to get better than that. So you either want to join or you don't. I'm not here to convince you. I'm here to offer it for those that want to. It's the second link in the description down below. It's the only team that I work with. It's the only team that gets to watch me trade live every day. If you want to work with me, that is the only thing that I offer. No ands, ifs, or buts. It's literally the only thing that I offer. So if you want to go beyond my videos on YouTube and you want to work with me closer with structured content, that is exactly what LPP offers. One-time payment, lifetime access. Second link in the description down below. And again, if you have any questions, please ask before you sign up. Don't sign up if you have questions. Message me via Discord or via Instagram, and that's the first or third link in the description down below. I want to make sure that before you even sign up and join our team, that you are confident that it is what you want to experience. So if you're ready, second link. If you have questions, shoot me a DM via Discord, and that's the first link in the description down below. I appreciate your time. Like always, let's make sure that we end the year on a green note, and I'll see you for the meta earnings in about 40 minutes. So make sure you subscribe. Take care, team. Oh man, that was great. Really enjoyed it.